Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the first quarter of 2023, and that stock is General Electric. And we can see over the last year, GE is up almost 70%, while the rest of the market is up only about 1%. So they're completely outperforming the market over the last 12 months. And so in this video, I'm just going to look into some of the recent news that came out surrounding GE as well as their financial statements so we could get a look at their earnings. And then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for GE so we can know if this is a good price to buy into the stock from a value investing perspective. And so right here in this article, it's titled General Electric Continues to Silence the Doubters. Some of the key points they start off with include the fact that GE Aerospace is firing on all cylinders, that part of their business is doing really well right now. Also, GE Power, which focuses on renewable energy, has been restored to profitability and cash flow is now a solid contribution. And then also the U.S. onshore wind market is back in growth mode, partly thanks to the Inflation Reduction Act. So to start off, one of the key points I highlighted in the article is that the stock is up a whopping 49% year to date in 2023, starting from January. So GE is obviously having a really good year right now. The aerospace division of their business reported 25% revenue growth year over year, strong margin performance of 19%, and it led to a 46% increase in their operating profit up to $1.3 billion. Also right here, they point out that as commercial flight departures continue their recovery, it's more likely that airplanes will need servicing and shop visits, leading to strong growth in services revenue for GE's aerospace segment. Also right here, as another part of their aerospace segment, their LEAP engine deliveries increased by 50% to 1,700 deliveries in 2023. And the LEAP engine is used in both Airbus and Boeing. So obviously, they have a little bit of diversification among their client base here. And then next, they have their GE Renewable Energy segment. Their business orders in this segment grew a whopping 94% in the first quarter, mainly due to high voltage direct current to connect new renewable sources to the grid. So they obviously contribute a little bit in terms of renewable energy integration. And so those are just some key points to touch on for GE's business. Those are their main two segments right now, renewable energy and aerospace, and they're both obviously doing quite well. That's probably one of the things that contributed to this really big uptick in their stock price over the last 12 months. And so right here we can see their financial statements. I'm going to look at their income statement, their balance sheet, and their cash flow statement. Starting off with their income statement here, revenue growth year over year for the first quarter of 2022 to 2023 was about 14% from 12.6 billion to 14.4 billion. And their net income increased a lot. They had a net loss in the first quarter of 2022 of $1.1 billion, but they had net profit of $7.3 billion in the first quarter of 2023. Also on page 21 here, this is their balance sheet. Total assets from December 31st to March 31st decreased from 188 billion to 164 billion dollars. Also, we can see that most of their business is financed by liabilities. They have $131 billion of liabilities and only $32 billion of equity. Retained earnings increased from $82 billion to $84 billion. So now they have more cash to redistribute to shareholders. And then lastly, on their cash flow statement here for the first 3 months of 2022 and 2023, we can see that their net cash used in operating activities came out to be about a little over $200 million for the first quarter. And then they also paid out dividends and repurchased common stock. They repurchased around $300 million of common stock, and they paid out dividends to shareholders of around $200 million. So in total, they returned around $500 million to shareholders, which, considering the fact that their operating cash flow was negative, obviously it shows that GE is prioritizing returning value back to shareholders at the moment, on top of the fact that their share price increased by about 70% over the last 12 months. And so right here, this is my discounted cash flow model to figure out the intrinsic value per share for GE. Yahoo Finance is estimating that the company is going to grow at around 25% for the next 5 years compounded annually. So I was conservative and I cut that value in half to 12%. They had around $4.5 billion of free cash flow in their most recent full year, a net debt position of $2 billion after subtracting their cash on their balance sheet, and a little over 1 billion shares outstanding. That puts their estimated intrinsic value per share at $127 per share, which means that at the moment they are currently trading below intrinsic value. They're trading at $100 per share right now, which means they are currently trading, according to these Yahoo Finance estimates anyway, they are currently trading below intrinsic value per share. Then on the right side here, I did a quick competitor analysis comparing them to some other companies in their industry, particularly Boeing, because that's competitive to their GE Aerospace division, and then also Merck, because that's competitive to their GE Healthcare division. Obviously, it's going to be a little bit difficult because GE is a conglomerate company, so comparing the profit margins for the entire conglomerate to the profit margins for these highly specialized healthcare and aerospace industry companies is going to be a little bit difficult of a comparison to make. But with that being said, we can see that in terms of gross profit margin, or really in all assets of the business, it looks like Merck is doing the best here. They have the highest gross profit, net profit return on assets, and they also pay out the highest dividend per share. Boeing is not profitable, and they don't pay a dividend, so they don't really have any line items here to show for that. They only have a 5% gross profit margin line item. But for GE, they have a 27% gross profit, 1% net profit, 0.45% return on assets. They're trading at 13 times earnings right now, and they pay out a dividend per share of around 32 cents per share. So based on this, it would look like Merck is doing the best, but obviously, like I said before, comparing a conglomerate company to these more specialized company can be a little bit tricky at times. And then to end off the video, I wanted to compare GE to some of the other companies we've looked at in the past few videos. I recently did a little upgrade right here, as you can see, for my share price compared to intrinsic value chart, because one of my subscribers had the great idea of actually including the share price and the intrinsic value estimate for each of these companies when I release the video, because I don't really update them. So as time goes on, the share price obviously changes, and that could change this value to the right hand side here. So instead of updating it every single video, I decided to just log down or record the share price for the stock when I make the video, as well as the estimated intrinsic value per share for that company when I made the video, so you could know what share prices I actually used to make this calculation. And so for starters, we can see right here that GE is trading at around 80% of their intrinsic value. Their estimated intrinsic value is $127 per share, and their current share price is around $101 per share, which means that right now they're trading at around 0.8 times their intrinsic value per share. The only companies on our list right now that we've looked at in the past that are trading below intrinsic value are Google, GE, Chevron, and ConocoPhillips. The other companies were trading at a better price compared to their intrinsic value than any of the other companies we've looked at, but they were not trading below intrinsic value per share, as you can see right here. The only reason I have Verizon on this list is because before making this video, I updated all of these values just so that they could be up to date, and Verizon is no longer trading at a good price. They actually have a negative growth rate, and their intrinsic value per share is estimated to be like way out of whack compared to their current share price. So I'm probably going to end up replacing this value by the next video, whatever company we look at by next video. Then over here, I looked at their growth rates. We see that GE has an estimated growth rate of around 25% for the next 5 years. So that's good enough to put them in the third place spot compared to the other companies we've looked at. We could see from a gross profitability and net profitability actually, that GE obviously had, I believe, 27% gross profit margin and 1% net profit margin, which is not good enough to get them onto the table here. Adobe and Microsoft hold the #1 profit margin spots on our tables. And then lastly, on the right hand side here, I compared all of the companies we've looked at, or not all of them, but the top 10 companies we've looked at based on their stock performance over the last 5 years. We can see that General Electric, although they're up around 70% over the last year, they're only up around 10% over the last 5 years. So that is not good enough to get them onto the table here. I also updated this table slightly. I included the share price on record when I make the video for all of the companies that make it onto this top 10 table, so you can know what share price I used when I set this stock performance over the last 5 years. If 10 videos from now, Tesla's share price is $400, it'll probably still say $203 here, but you'll know that when it was at $203, it was up around 1,000%. So if it's up to $400 per share, then it's probably up a lot more than that at the time of making that video, whenever that is in the future. But we can see from this chart here that Tesla is obviously dominating, followed by AMD, Eli Lilly, Chipotle, Apple, and you can see the rest of the companies here. But GE was not good enough to make it onto this table. So all in all, based on this, it looks like GE is pretty competitive compared to the other companies we've looked at, especially over the last year. We saw that they are trading below intrinsic value per share right now, and they have an estimated growth rate of around 25% over the next 5 years, according to Yahoo Finance. In terms of comparing them to other companies in their industry, it can be a little bit tricky because GE is a conglomerate company, and the discounted cash flow model shows right here that they're trading below intrinsic value. Over the last year, their stock price has done really well, so it'll be interesting to see if they could keep up this momentum. Let me know in the comment section down below what you guys think about GE and if you guys are planning on buying any shares of this company. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.